We'll get to Vinay in just a bit. But before that, let's just talk about the Asian markets. We should get the setup for you on your screen. Not too much happening in the Asian markets this morning. It's flat with a bit of a positive bias in some of those markets. It'll just come up for you. Vinay, hi, good morning. Is my voice reaching you?
Yeah, hi, good morning.
Hi.
Definitely.
Hi, morning. Your conference begins today, your one-day conference, and you have a lot of mid-cap companies that are coming in and attending your conference today. So just going through that very long list of stocks, many companies that are participating in your conference are from the manufacturing space, and over there we've seen a bit of a slowdown in terms of earnings this quarter. What's your own sense that you're getting about how earnings has shaped up, and when would you expect a recovery to come through?
So see, if we look at the earnings shaping up going forward, we're looking at large cap earnings to shape up at around 10 to 12% growth. In terms of mid caps, we're looking at a 15 to 20% earnings growth shaping up over the next 9 to 12 months. So in terms of earnings that some of these companies have delivered, we've not seen major disappointments in a lot of the mid cap companies. There have been some disappointments, of course, in some of the mid caps, in some of the large caps. But overall, we continue to be positive in terms of what manufacturing, the kind of infra growth that we're seeing, the kind of impetus that will be paid to infra projects, the GST implementation coming in. And if we have a good monsoon, then we are on a roll 6 to 9 months from here.
Hi Vinay, good morning. Are the street expectations for FY16 earnings higher than the 10 to 12% that you're anticipating? So in that sense, do we still face the risk of a downgrade to the earnings assessment? And if yes, what impact can that have on the market?
So 10 to 12% is a fair assumption, I think. I don't see a major downgrade or a major risk to that estimate. So I think we have seen some profit booking happening from 9,000 levels. I think the current market levels that we see in at 8,300, 8,400 kinds of factors in the short-term disappointment. So yes, I don't see any major downsides from here.
Okay, let's talk about some of the stocks that you've identified for us. One of them is IFB Industries. This stock has had a very strong performance this year.
Right.
It's up almost about 40%. What's the story there, and how much more of an upside do you see?
So see, the story in IFB is pretty simple. They have been a front-load washing machine player for a long time. They've got a huge market share in that space. The big change that's happening in their business is now in terms of top-load washing machine, wherein they would now be doing domestic manufacturing at their Goa facility. So that allows them the operating leverage, the margin play coming in. That also allows them to increase their product basket. So they've got front-load where they are a market leader. They've got top-load now coming in. They've got AC and refrigerators also within their portfolio. So definitely this will help them grow at a 25-30% CAGR over the next 2-3 years. Plus, at the same time, they are also getting into a contract manufacturing tie-up with a Japanese player. So that will further help them boost their manufacturing capacity as well as help drive their operating leverage. So going by that, I think the gap between a player like IFB, which has been undervalued for a long time, and a player like Whirlpool would keep reducing as we go forward, because the company will continue to deliver margins. They have historically been at 4% margins. We see them moving to almost 9 to 10% margins. The earnings growth of almost 25 to 30% will aid the earnings re-rating for this company. And definitely, I think it's a no-brainer for me.
Okay, IFB Industries has rallied 500.
We have a target of...
Go ahead.
Sorry?
No, go ahead.
So we have a target of 780 over there. Currently, we are valuing it at 25 times.
All right. We were just highlighting how the stock has seen a rally of 500% in the last 12 months itself. So it's already been such a big multi-bagger. The other one that you're recommending is, MRPL. This one too has seen a pretty good rally so far in 2015 with a gain of about 45%. How much more upside do you see in MRPL?
So on MRPL, we have a target of 104 against the current price of around 65 to 68. The big change that we identified in this stock was that their phase 3 commissioning was coming into place. This would have helped improve their product slate. Further, this is also helping improve their GRM. So their core GRMs, which were as low as $0.4 last year, end of Q4 FY14, has moved up to $6.7 in Q3. And in the last completed quarter, they have reported core GRM north of $8. And further, with the petchem plant commissioning happening now, we are expecting further $1.5 core GRM improvement. So definitely, I mean, this stock is showing the kind of promise that we had anticipated, with the phase 3 commissioning coming in, with the petchem plant coming in, with the product slate improving, the product basket improving. Overall, I think the company is definitely a multi-bagger. And if you look at it, they've also acquired a 51% stake in OMPL now. So if you look at the valuation, so OMPL would be approximately 14 rupees a share for them, and their core business would be valued at approximately 90 rupees. So that gives you a target of 104. That's like a huge upside from current price of 68, 67.
Okay, I'm sorry to interrupt you, but we have been chatting with Vinay Pandit, the Senior Vice President of Institutional Equities at Centrum Broking. They have a conference a one-day conference today. So ahead of that, we have been speaking with him. Vinay, you have been telling us a couple of these stock ideas. One of them is Apar Industries. This one is into the mechanical engineering, power transmission, etc. And the stock has actually fallen about 20% this year. Do you think the worst is over?
So this company is primarily into conductors. That's one part of their business where they are market leaders with another player. The second part of their business is specialty oils. Now, the reason for the fall that's happened in this company is primarily two. One, that crude corrected from its peaks. So they've seen some inventory losses in their specialty oils business. The second is in their conductor business. They have been having some international orders where they've had issues of passing on the physical premium where they've lost out on the LME. So that is what has hit them. These orders are being adjusted now. They are being readjusted. So all future international orders are now being bid along with the volatility in the physical premium as well. So I think the kind of correction that we've seen has factored in. We were expecting weak earnings for the fourth quarter. But that's when we believe that this company kind of factors in most of their downside. And therefore it is available at almost 6.8x or 6.5x FY17 earnings. And even if you look at a 10x multiple, we are talking about a reasonably big upside from here, 330 going up to almost 490. So that's been the reason for the downside in this company. And probably another quarter where they'll have these export orders which have been building in some losses coming into their system. Post which we are expecting the EBITDA per ton in this segment to revive as a full year and come back to its historical highs the next year itself.
Okay, and finally, film industries. Generally, we've seen a lot of these auto ancillaries do well, but this company, which is in automotive lighting, has been an underperformer over the last few months. It's down 30% in 2015. Again, you see a turnaround and a pickup in growth in film industries?
So, the turnaround or the fall that we've seen in the two-wheeler was two-pronged. One was the whole monsoon effect that happened in one of the two-wheeler companies. The other was that in case of Honda, they've got their new capacity coming up only by Jan next year. So we've seen some tepid volumes in the auto ancillary segment, which is what is pulling it down. But then at the same time, if you look at the two-wheeler volumes for TVS, we are quite positive with the new product launches that they're doing, the scooter launches that they're doing. We're quite positive about that as well. And again, the stock has corrected significantly from its peak. So considering the valuation that it's available at today, I think this company will definitely do well. At the same time, if you look at their LED business, now within the LED space, there are two parts to it. One is the automotive business, which they anyways working with their existing OEMs. The second part to their LED business is the street lighting business. Now the government is quite focused on moving away from the gas bulbs, from the traditional lighting solutions, and replacing it with LED lights, which are definitely power saving. For this, they have set up this body or the organization called ESL, to which they've allocated almost 10,000 crores over the next few years to work on the street lighting business. Now, if you look at this part of it, within this itself, the company has won itself an order worth 100 crores, which itself beats the turnover that they've done in FY15. 2-3 more such orders, and we're looking at large revenues in that segment. And by Jan 16, you'll see Honda's new plant coming in. The volumes reviving even in their auto ancillary lighting solution business. TVS's new products are anyways moving in. So all of this combined together makes it an attractive bet.
Okay, thank you for that long and interesting list of mid-cap ideas that you've given us today. Vinay, all the best for your conference today. That's the word coming in from Centrum. But let's get back to chatting about the markets. The pre-opening rates have settled flat with a bit of a positive bias. Remember, there are 14 new companies that enter into the F&O markets today. So a lot of them may be active, the likes of Ajanta Pharma, Britannia, CEAT, SRF. There's a pretty long list. And to tell us about